Today, we will talk about how to write a financial statement. Let's have a look at the details. Financial statements are the formal record of a company's financial activity. The main components of a financial statement are the balance sheet, the income statement, and the statement of cash flows. The balance sheet shows the assets, liabilities, and shareholders' equity at a specific point in time. The income sheet, on the other hand, shows the revenues, expenses, and income or loss for a specific period of time, usually a month, quarter, or year. The statement of cash flows shows the cash balance at the beginning of a period, the inflows and outflows of cash during a specific period, and the ending cash balance. The first part is building a balance sheet. Understand the basics of the balance sheet. The balance sheet is called so because it shows the company's balance between assets and liabilities. The balance sheet reflects this relationship. First, all assets and liabilities are listed and added up on the balance sheet. Then, liabilities are subtracted from assets to determine a figure for shareholders' equity. Determine your assets. Your assets are anything that you own, including the cash you have on hand. Assets are usually divided into current assets and fixed assets. Write all the information up. To write the balance sheet, you need to lay this information out in detail. You need to label each asset along with the dollar amount, divided into current and fixed assets. Then, add all of your assets up into a total. Determine your liabilities. Your liabilities are what the company owes or is paid to other companies or people, including employees. In other words, it's the company's debt. These assets are also divided into current and long-term categories. Make a record of your liabilities. Just like your assets, you need to account for each liability in major categories, such as loans, mortgages, and so on. Also, divide your liabilities on your balance sheet into current and long-term. List liabilities by category and include the value of each category next to its name. Add up all your liabilities to get your total. Subtract your liabilities from your assets. To figure out the shareholders' equity, also called shareholders' equity, you subtract what is owed from what assets you have. A positive amount of equity indicates that the company has financed its operations with its own money or investors rather than relying strongly on debt. Expand on shareholders' equity. On your sheet, have a section where you show what the shareholders' equity is. This section will include items that represent the shareholders' interests in the company. For example, common stock, preferred stock, capital over par, and retained earnings are all common shareholders' equity categories. The second part is writing the income statement. Start with net sales. Net sales represent the gross sales minus any returns, discounts, or allowance for lost or damaged goods. Calculate gross profit. Gross profit represents the company's profit after considering the cost of goods sold, or services provided/sales. The cost of goods sold includes the cost of all materials and labor that went directly towards producing the sold products over the period. Total this amount and subtract it from net sales to arrive at gross profit. List the company's operating expenses. On the balance sheet, expenses are separated into two major categories, operating and non-operating expenses. Operating expenses follow the same philosophy as the cost of goods sold. Write out non-operating expenses. Lay out your income statement. As you go, lay out each piece of your income statement. Net sales will be at the top. Each piece will follow in sequential order. The third part is writing the statement of cash flows. Start with net income. In order to create a statement of cash flows, you will first need a completed income statement and completed balance sheets from this period and the previous period. Begin calculating cash flows from operating activities. With operations, you're looking at how much operations bring in through cash. This step is different from what you did in your other statements because those statements include non-cash items. Determine cash flows from investing activities. Like with operations, you need to examine how investing has affected your overall cash flow. Look at the cash available from financing. The third category is financing. This section is focused on the money that is used to finance your business, such as loans. It also has to do with stock options and shareholders, and how that affects cash flow. Lay out your statement of cash flows. Start with the net income at the top, and move down through the three categories. Subtract and add cash as needed in each category, to reach your net increase or deficiency in cash for the year.